Hey everyone, Airbnb is one growth stock down 45% that I think you're going to regret not buying on the dip. In this video, I'm going to talk about why, so let's go right into it. Airbnb's revenue growth over the last several years, I show here. The one thing to highlight is the dip of 30% after the onset of the pandemic. That's to be understood, right? One of the things that you wanted to avoid doing during the pandemic was getting on airplanes, crowded trains, crowded buses. So travel was decreased substantially. In fact, travel spending decreased by almost $1 trillion in 2020. It fell from 1.5 trillion all the way down to 600 billion, a massive decrease in overall worldwide spending on hotels and resorts, and that was according to Statista. That spending has rebounded, and as a result, Airbnb has recovered. The recovery was stronger than the decrease. Look at the downfall was only 30%. The rebound was much higher than that, over 60%, and then again over 40% in revenue growth in back to back years. This is likely to persist because we're still not back to the level of spending that we did on hotels and resorts before the pandemic. That is in 2019. Overall, worldwide spending on hotels and resorts is still not back to that level. It's going to take some time to recover to that level. It's a slow reopening. It hasn't been a snapback reopening, right? Even though Airbnb recovered in a V shape, overall hotel spending and resort spending has not recovered like that. So there's still room to expand, and Airbnb is going to benefit from that tailwind. Next, Airbnb is capitalizing on this recovery to improve profitability. Now, one of the first things that Airbnb did at the pandemic's onset is really to streamline the business, right? It was afraid that the decrease in overall travel spending would continue and persist, right? It didn't know how long people were going to avoid traveling. So, what Airbnb did is it really streamlined its operations. It looked to reduce costs, remove things that are unnecessary, and really strengthened the business during those initial stages of the pandemic when its business was struggling. So, what that's allowed Airbnb to do is that as its revenue rebounded, it really boosted profitability. And you can see that in this chart where operating profit margins for the trailing 12 months collapsed. And then as revenue has rebounded, it's really recovered and it's gone really above its long-term trend line at 22.51%. Really strong operating profit margins for a company that's still growing as quickly as Airbnb is growing. Perhaps more impressively is Airbnb's cash flow from operations to sales. This measures how good Airbnb is at turning sales into cash flow from operations, and this has jumped higher as well, over 40% for several consecutive quarters now in a trailing 12-month period. Now remember, Airbnb doesn't own or operate any of the properties on its platform. All it does is bring together renters and travelers and takes a fee for bringing them together. So it gets a fee for every transaction that happens on the platform. That's a really lucrative business model because it doesn't need to invest and spend money on building these hotels and resorts. It also doesn't need to spend money maintaining and operating these resorts. And so it really boosts its operating profitability because all it needs to do is make sure and improve its platform to make it easier for hosts to sign up, to remove any of the pain points from travelers and hosts, right? Anytime it identifies something that is a friction point, a pain point, to really go in quickly and fix it, and so that it doesn't cause a decrease in transactions between hosts and guests. And up until this point, it has done a really good job of doing that, making incremental improvements to the platform, creating innovative features like a one of the innovative features it did is it removed the need for specific travel and destination dates, right? Other websites, you might notice when you go on there, it'll ask you when are you looking to travel and where are you looking to stay. So very specific, right? A specific date and a specific location. What Airbnb has introduced is a more broader based search. So if you're searching for a specific location and date and the prices are a little bit too high in those on those dates and locations, Airbnb recommends something similar around that location, or maybe the week before or maybe the week after. And so that it's called flexible search, and that's helped Airbnb capture more customers who would otherwise not book a vacation, because they go on there, they search for that date and that location, and it might be sold out or it might be prohibitively expensive, which is a turnoff for some travelers. And if there's a flexible date, maybe somewhere 20 miles away or 10 miles away, that's a lot cheaper, then they may get that customer to book that trip, whereas otherwise they may just exit the website and not book that trip. Those kinds of improvements have really helped Airbnb continue capturing customers and market share and continue growing in an effective and efficient way, as evidenced by its growing operating margins, by its growing cash flow from operations. I want to thank the Motley Fool for sponsoring this video. Visit fool.com/parkev for the 10 best stocks to buy now. And of course, one of the most important things to consider is the valuation. Many times you have companies that are performing excellently the way Airbnb is performing, but the stock is way too expensive to it's actually overpricing in the excellent performance, the excellent prospects. That's not the case for Airbnb. It's trading at a forward price to earnings of just 28.16 and a forward price and a price to free cash flow of 23.27, near the cheapest it has been according to this metric going back several years, and similar with the forward price to earnings ratio. Now, it's important to remember when you're looking at a stock, the stock price, the market price, doesn't necessarily determine the stock value, right? Value is what you get for the price that you pay. Price is just the price, right? So the price could be lower, but you could be not getting good value because what you're getting in return is also lower, right? So I could give you a box of cereal completely full, charge you $5, or I could give you a box of cereal half full and charge you $4.50. Is that a better value? No, right? Because I've eliminated half of the box. I've decreased the price, but only by 50 cents, only by 10%, but I've eliminated half of the box. So a price decrease on its own doesn't necessarily mean that the stock is a better value. With Airbnb, you're getting a stock price decrease, but at the same time, you're getting more earnings, more free cash flow, and so you're getting a better value overall. Lower price and more earnings, more cash flow. So you're getting the best of both worlds here with Airbnb. For that reason, I think Airbnb is one growth stock that you're going to regret not buying on the dip. All right, so that's all I've got for this video. Thank you so much for watching. I've picked some videos that I think you'll enjoy that are popping up on your screen right now. So please click on one of those, and I'll see you over there.